Hi class, a pleasant day to all of you. This is your Prof. Sir Dan, and in this video, we are going to discuss the continuation with regards to the illustrations of agreements. And here we're going to discuss agreements 3 to 6 on the distribution of profit or loss. And in addition to that, we are going to discuss the preparation of the statement of changes in partners' equity. Okay? As I have said, we are going to discuss number 3, which is providing interest on capital balances. Number 4, which is providing salary. And number 5, providing bonus. And number 6, providing combination of interest, salary, and bonus. Okay, let us begin. First, providing interest on capital balances. The agreement is that provide 15% interest on average capital balances, and next, the remaining balance to be divided equally. And the amount of profit to be distributed, 300,000. So let us have now structure the distribution of profit. So we have to get the interest on capital balances. So we have to have a column for each partner, Medina and Detoya. So let us first determine their average capital balances because that will be the basis of the 15% interest. And we have learned from previous slide that the capital balance, the average capital balance of Medina is 475,000 and for the Toya it's 775,000. So we have to multiply these capital balances with 15%. So the amount of interest that will be provided to Medina is 71,250 and for the Toya 116,250 for a total of 187,500. And next agreement is that the remaining balance to be divided equally. So let us get the remaining balance, which will be divided equally. So we have a profit of 300,000 and we have already distributed 187,500. So the remaining balance is 112,500. So we have to divide this 112,500 equally, divided by 2. So the share of Medina and the Toya is 56,250 each. Okay? So we have to add this distribution, and the distribution of profit for Medina is 127,500 and for the Toya 172,500 for a total of 300,000. So we were able to fully distribute the 300,000 profit. Okay? And to do the entry, we have to debit the income and expense summary of 300,000 and Medina drawing 127,500 and the Toya drawing 172,500. Okay? Next, same thing, we will provide interest on capital balances, but at this time, our assumption is that there is a net loss. Okay, so we are going to use the same agreement, which is provide 15% interest on average capital balances and the remaining balance to be divided equally. Okay, at this time, we have a net loss of 10,000. Okay? But take note, class. Interest on capital must be honored regardless the operations yielded a loss. So even there is a loss, you have to honor the agreement for interest on capital balances. So let us do the distribution. So let us first calculate the interest on capital balances for the partners, and it is based on average capital balances. We were able to determine that already in previous slide. So the interest is 71,250 and 116,250 based at 15% interest. So the total interest is 187,500. Okay, next is compute the remaining balance to be divided equally. We have a loss here. Okay, so we have to put the 10,000 negative as a loss minus what we have distributed 187,500. So negative of 10,000 minus 187,500. So you will get 197,500. And you have to divide this equally because that is what is in the agreement. Remaining balance to be divided equally. So 197,500 divided by 2, you will get 98,750 for each partner. So the total of that is 197,500. So here, class, for Medina, he receives an interest of 71,250, but he will share 98,750 negative, okay, a loss. So the net effect for Medina is a negative of 27,500. For Detoya, he received a 15% interest of 116,250 but shares on the balance of 98,750. So there is a positive of 17,500. Okay, so the net balance of this is 10,000 negative as well as on this side. Okay, so the answer here, considering that this is a negative, so it will be a debit to Medina drawing of 27,500 and a credit to the Toya drawing of 17,500 and a credit to income and expense summary, which is the loss of 10,000. So this will be the entry. Okay, let us move on. Next is providing salary with profit not sufficient to cover the salaries. Okay, so we have this agreement. Provide salaries to Medina of 100,000 and Detoya of 60,000. Next, balance to be divided equally. Okay, our profit is 50,000. So our assumption is that the profit, which is 50,000, is not sufficient to cover the salaries because the salaries of Medina and Detoya, the total is 160,000. So here, class, again, we have to do the distribution for Medina of 100,000 salary, and then for Detoya of 60,000 for a total of 160,000. And now we have to divide the remaining equally. So how much is that? So we have 50,000 here minus the 160,000 that we have distributed. So we have here negative 110,000. Okay, class? Positive 50 minus 160, okay, you will have a negative of 110,000 divided by 2. It has to be shared equally. So each one will get a negative of 55,000, each partner. Okay? So here we have the distribution of profit for Medina is 45,000. For Detoya, it's 5,000 for the 50,000 profit. So the profit was distributed 45,000 to Medina and 5,000 to Detoya. So the entry is debit income and expense summary of 50,000, credit Medina drawing of 45,000, and Detoya drawing of 5,000. Okay, let us move on. Okay, next is providing bonus. Okay, and these are our agreement. First, provide 25% bonus to partner Medina. Next, balance to be divided equally. Okay? So class, bonus is provided if operations are favorable, of course. That this is obvious. Okay? And favorable would mean that there is a profit. The provision of bonus is to encourage partners to maximize the profit potentials of the partnership. Okay, class, in this we will have a net profit of 300,000. So let us have the distribution of bonus, 25% bonus to partner Medina. So 25% of 300,000 is 75,000. And there is no mention about Ditoya's bonus, so Ditoya will not receive any bonus. So the total bonus is 75,000 given to Medina. Next, the balance to be divided equally. Okay? So we have 300,000 profit minus the bonus of 75,000, then you have 225,000. You have to divide this equally because that is what in the agreement. Okay, so divided by 2, you have 112,500 for each partner. Okay, and the total for Medina on the distribution of profit is 187,500. For Ditoya, 112,500 for a total of 300,000. That is the amount of the profit that was distributed. Okay, so the entry is debit income and expense summary of 300,000, credit Medina drawing of 187,500, and credit Detoya drawing of 112,500. Okay, next. Next is providing combination of interest, salary, and bonus. Okay, and these are the agreements. First, provide salaries to Medina of 100,000 and to Detoya of 60,000. Next, provide 15% interest on average capital balances, which is Medina's average capital balance is 475,000 and Detoya is 775,000. The average capital balances that we have calculated. And next, provide 25% bonus to profit after salaries and interest to partner Medina. Okay? And then balance to be divided 40-60. Okay? So class, the amount of profit that we are going to distribute is 400,000. So let us distribute. Salaries first. Okay, for Medina, 100,000. For Ditoya, 60,000. For a total of 160,000. Next, interest on average capital balances. So interest on average capital balances. So 15% of 475,000, that will be 71,250, and 15% of 775,000, that will be 116,250, for a total of 187,500. Okay? Then the remaining balance for bonus. So let us calculate first whether how much is the remaining balance. So we have 400,000 minus 160 for the salaries and 160,000 for the salaries and 187,500 for the interest on average capital. So that will give you 52,500 remaining balance times 25%, which is the percentage for bonus to be given to partner Medina. So Medina will receive 13,125. In this situation, Ditoya will not receive any bonus. Okay? And the balance after the bonus, because it has to be divided 40-60. So we have to determine how much is the remainder after giving bonus. So 52,500 minus the bonus of 13,125. We still have 39,375. So we will distribute this 40% to Medina and 60% to Ditoya. So 40% of 39,375 is 15,750, and 60% of 39,375 is 23,625, for a total of 39,375. So adding all of this, we will have the share on the profit for Medina of 200,125 and Ditoya 199,875, for a total of 400,000. Okay? That's it, class. We were able to cover agreements 3 to 6. And now the next slide. Oh, by the way, this is our journal entry. We debit income and expense summary 400,000, credit Medina drawing of 200,125, and the Toya drawing of 199,875. Okay? And now, class, let us discuss the preparation of statement of changes in partners' equity. So the information that we are going to use in the preparation of the statement of changes in partners' equity are the capital, Medina's capital, and the Toya's capital for 2019. Okay? We have seen this in the previous slides. And we are going to use also the respective drawing, okay, in the illustration of this preparation of the statement of changes in partners' equity. And we will also use the distribution in the previous slide, okay, for the 400,000 profit. Okay, now let us prepare the statement of changes in partners' equity. Of course, the first is the heading. And then next is you have to provide a column for each partner and the total column. You have first to indicate the balances in the beginning of the year, which are 400,000 for Medina and for Ditoya 800,000 because that is for January 1st, 2019 for a total of 1.2 million. Next, you have to add the additional capital for the year. And for Medina, on April 1st, there is an additional of 100,000. Okay? And for Ditoya, there was none. Okay? There was no additional capital for Ditoya. And then you have to deduct now the permanent withdrawal. Okay, for Medina, there is no permanent withdrawal. There was no withdrawal. For Ditoya, there was a 50,000 withdrawal on July 1st. So you have to deduct the 50,000 from Ditoya. And now you have to get the subtotal, which are the balances on December 31st before the distribution of profit. And the balances are 500,000 and 750,000, which are the balances that were reflected on the record of Medina Capital and the Toya Capital. And here now, class, after this, you have now to add the profit received by each partner. So add share on profit for Medina, 200,125, and for Ditoya, 199,875 for a total of 400,000. Then deduct the regular drawings, which in this case, Medina of 60,000 and Ditoya of 60,000. And you will have the balances on December 31st after profit, which are 640,125 and 889,875, or a total of 1,530,000. Okay, class, so that's it. And I hope that you have learned a lot on this video. If you have questions, please let me know. Okay? And that's the end of our lesson on partnership operations, distribution of profit or loss. Okay? Bye for now.